everyone, this is Amit Pabari, founder and managing director of CR Forex. What a week it was. Global equity market continues to fall. S&P index out of last 10 weeks, 9 weeks it has fallen. Dollar index made a complete reversal from 101 level. 10-year US Treasury yield has increased by 7%. Japanese yen fallen to a 20-year low against dollar, and most of the Asian currencies are getting weaker and weaker. Despite all of the negative point, RBI defended rupee and did not allow rupee to depreciate above 78 level. They were standing like a wall and selling on the forward market. If you see, the forward premiums have fallen because of that. But on Friday evening, after our market closed, US CPI data came, which was above the market expectation, and it came at 40-year high, because of which dollar rupee pair closed at 78.17 level on Friday night in the NDF market. So now the big question is, where do we see dollar rupee pair in the coming days? Before coming to the conclusion, the biggest event for the coming days is Fed meeting. Market is expecting that the Fed will increase the interest rate by 50 basis points, and 95% probability is that they will do the same. But the important aspect to watch is the statement that in the future Fed event, what are they going to do? Whether they are going to increase the interest rate by 50 basis point or not. If they increase the interest rate by 50 basis point only in the future event, that is their statement, market will remain calmer. If they say or they sound more hawkish, for example, they say that in the coming event, they will increase the interest rate by 75 basis point, then market will get hitten up. Dollar index will move above 105 level. The equity market continue to fall. Emerging market currencies will get weaker and weaker. Now coming back to our dollar rupee pair. Dollar rupee pair was in a consolidation phase between 77.40 to 77.80 level. Generally, in the past, we have observed that whenever a consolidation phase in the pair will end and there is a breakout, the pair will move at least by 1 to 1.5 rupees. So technically, if we say that the breakout is above 77.80 level, then the pair should move straight away towards 78.80 to 79.30 levels. But as RBI is on the defending side, so for the coming week, we are expecting the dollar rupee pair to trade between 77.80 on the lower side and 78.5 on the upper side. Now let us discuss strategy for thin margin exporters. Thin margin exporters like agri exporter or a chemical exporter, they must have taken costing between 77.5 to 77.70 level. For them, on Monday morning, the pair will likely to open close to 78 level. So between 78 to 78.20 level, they should ideally cover 70% of their exposure. For remaining 30% of their exposure, they can wait with a stop loss of 77.70 level. Now let us discuss strategy for thick margin exporters. Thick margin exporters like textile exporter or an engineering exporter, they generally go and book a long-term forward. In last week, they might have observed that despite the spot level coming higher, the net rate for 1 year forward was almost the same because the premium has fallen down. For the coming week, we will suggest them two things. First, they should not increase their hedge ratio beyond 55 to 60%. That is idea number one. Idea number two is, in order to maintain their hedge ratio, they should cover between 78.25 to 78.40 level. We will request them not to increase their hedge ratio, thinking that the forward rates are good, as the things are not yet settled down. Till the time oil is not coming down, do not increase your hedge ratio drastically. Now let us discuss strategy for importers. Despite all efforts by RBI, it is the time that importers have to take a bitter pill, as stop loss of 77.80 and 78 will mostly get triggered on Monday morning. On Monday morning, they have two options. First option is that on Monday morning, go and buy at the money call option for your imports which are due for next 15 to 20 days. Ideally, at the money option is a better strategy to hedge, as we have and Fed meeting on the coming week. Second option, those who do not want to buy option, they can simply go and buy their imports for next 15 to 20 days. Now let us discuss trading ideas for coming week. Last week में दो कॉल था. USDINR 90-95% probability है, the stop loss will get hit on Monday morning. Euro USD we were bullish, but I think the stop loss have got triggered last week itself. So anyone who traded 1 lakh quantity would have made a loss of 31,000 rupees. For new trading ideas, let us wait for Fed meeting to get over. Post that, we will come up with a new trading ideas for coming days. With this, I will end my today's presentation. Jai Hind, Namaskar. फिर मिलेंगे next week. Thank you.